Welcome to Research Recap, our research podcast on making sense, the hub for JP Morgan corporate and investment bank podcasts. In each episode of Research Recap, we'll bring you the latest industry analysis and research insights from our team of award-winning experts.
Welcome to Research Recap. My name is Samantha Azzarello and I lead Content Strategy for Global Research. I'm joined today by Michael Feroli, our Chief US Economist, to talk about the September jobs report. Mike, thanks so much for returning to the podcast.
Thanks for having me.
So Mike, I'm going to start where we always start, and that is, what was your take on the jobs report? Do you want to highlight anything you thought was especially of note?
Well, obviously, it's kind of hard to ignore the smashing 336,000 increase, which was about double most people's expectations and really broke the trend of slowing job growth that had prevailed up until this report. Away from that, obviously big surprise, most of the other details were actually more in line with expectations. So the unemployment rate, after it jumped in August, held unchanged at 3.8% last month. And average hourly earnings actually came in a little softer at only a 0.2 gain. So in spite of this really strong job growth, you're seeing kind of a steady measures of labor market slack and some modest slowing in wage inflation.
Excellent. Going one layer deeper, I want to ask, is the strength broad-based or was it really concentrated in certain pockets?
It was pretty broad-based. So in private industries, I think it was about 64% of industries increased employment last month. Now, as in any month, there are some sectors that were stronger than others. And notably last month, you had a pretty big increase in restaurant employment, and you had another strong increase in healthcare. But that being said, as I mentioned, it was pretty broad-based, and so most industries were adding jobs.
So then going forward, what's your expectation for the labor market? And then we'll talk about the Fed after that.
Yeah, so obviously today's number was an interruption in the trend towards slowing job growth, which we expect will reassert itself going forward. Certainly financial conditions have recently been tightening, so that should reinforce the trend toward slowing job growth. In terms of the Fed, I think it makes November an interesting meeting, more interesting than it had been before this number. However, we're still thinking they remain on hold, again, partly in response to the tightening in financial conditions, doing a lot of the work for them.
Great. And then one more question on the Fed. Are they looking at a mosaic of data, or are they going to weight this report very heavily? And then I want to ask, just in general, if you can talk about what you think the lag monetary transmission is to the economy if they were to hike again.
So the phrase they like to use is they look at the totality of the data, and I think that holds with respect to this number as well. While we did have a surprise in the headline number, I don't think they're going to ignore the slowing in wage growth, the move higher in the unemployment rate. So I do think all these things are going to matter, and they won't just look at one thing. In terms of the lagged effect, nobody knows. There is a famous saying that it's long and variable. We generally think that length is somewhere between 1 and 2 years, but it's really not pinned down with a whole lot of precision, unfortunately.
And then very last question for you. If we had to look into the October report, there was the Hollywood strike, which did come to an end, and then UAW strikes, which are continuing and ongoing. What would be the impact, if any, that you could foresee in the October jobs number?
Yeah, so one thing we know is that in the October jobs number, you should get added back the workers who were on the Hollywood strike, so that should be a boost of at least 20,000. We don't know yet whether the UAW strike will show up in the October number because we don't know if the strike will go on into the period that they measure the jobs report, which is next week, actually.
Mike, thanks for your time and insights. Looking forward to talking to you again next month.
Thanks for having me.
And thank you to our listeners for tuning in. For more research insights, visit jpmorgan.com/research.
Thanks for listening to Research Recap. If you've enjoyed this conversation, we hope you'll review, rate, and subscribe to JP Morgan's Making Sense to stay on top of the latest industry news and trends. Available on Apple Podcasts, Spotify, Google Podcasts, and YouTube. This communication is provided for information purposes only. Please read JP Morgan research reports related to its contents for more information, including important disclosures. Copyright 2023, JP Morgan Chase & Co., all rights reserved.